Hello and welcome to Investor Daily Live. I am Keith Ford. I'm going to be your moderator for today. We're going to be talking all things Bitcoin and cryptocurrency, which in recent months has seen Bitcoin shatter some previous highs in terms of its valuation. Some of the more bullish projections put potentially $200,000 as being possible within the year. With flows from institutional capital increasing and spot ETFs attracting billions of dollars, crypto is solidifying itself in investment portfolios. Given this maturation, I'm joined today by three experts in the space to unpack what's happening in the world of crypto. Firstly, to my left here is Ryan McMillan, who's the Chief Investment Officer at specialist cryptocurrency investment manager Merkle Tree Capital. I've got Pav Hundal, who's the lead market analyst for crypto exchange SwiftX, and Jess Rendon, who is the CEO of crypto exchange CoinTree. Welcome everyone to the show.
Good to be here. Thanks, Keith.
Before we jump into the questions that I've got for you today and really get some of your expertise, I wanted to get a bit of a rundown on some of your background and what your companies do. So if we can start with you, Ryan, and Merkle Tree Capital.
Sure, thanks. So my background is traditional finance. That was hedge funds and asset management, running funds. At Merkle Tree Capital, we run a specialist digital asset portfolio. That's a wholesale unit trust that invests in a basket, or diversified active basket of what we believe are the best crypto assets, and package that up in a easy to use, easy to access structure of a unit trust.
Right. Pav, yourself and SwiftX?
Yeah, so SwiftX, bootstrapped exchange out of Brisbane. We've been up and running since 2018. But yeah, we provide everyone the ability to sign up as a personal account, entity, SMSF, all those sort of things to get access to crypto assets. And yeah, best known for our customer support and yeah, just making it a very seamless experience.
And Jess, yourself and CoinTree.
Yeah, so my background is from traditional fintech as well, and SMSFs initially. And then CoinTree, yeah, we're another Aussie digital currency exchange. We've been around since 2013, Melbourne born and bred. And yeah, we simply make it easy for customers to buy, sell and trade all different cryptocurrency assets. We also list digital gold, and we also encompass some really cool AI insights into the platform as well. And we support a myriad of customers too, from your retail customer to self-managed super funds, high-value corporate accounts as well.
Awesome. Thank you, guys. Something that we've seen be a big player in terms of how Bitcoin and crypto in general reacts to the way it works in terms of macroeconomic and structural factors. They've been a big part of what has driven Bitcoin's price so high in recent times. Just this morning, there's been some things happening in the world. There's obviously a lot happening in the Middle East with Israel, the US, Iran. It's pretty tension-filled times. How do things like this kind of impact the way that crypto reacts and how it's being used within markets?
Yeah, so it is becoming more and more of a macro asset, and that's that digital gold narrative where it is a non-sovereign issued asset. And also trades 24/7. So over the weekend, when other asset classes are closed, you can't sell anything else. Often Bitcoin might get sold if a portfolio or investor wants to de-risk their portfolio. So the immediate reaction can be to sell. But typically we see within a few weeks of that, Bitcoin price has recovered pretty quickly as those other qualities that it has come to the fore in being non-sovereign and much more like gold.
Well, it's while it gets that digital gold kind of name, it kind of only kind of acts like gold. What do you see in the way that it differs from that as an asset class?
Yeah, you nailed it on the head. It is a correlation coefficient that definitely reverberates over time. So you'll see periods where it's more correlated to your traditional tech stocks. But most recently, there is some good research that we've been doing, as well as you'll see other name brands like Cross-Border Capital. They're finding that gold is more in lockstep with what Bitcoin is doing, or Bitcoin's in more lockstep with what gold has been doing for the last, let's call it, anywhere from 90 days is what we're measuring. But the key takeaway really is that can change over time, right? But what we're seeing obviously during this period where there has been this unrest, there has been a flight to gold, seeing just from a purely data perspective that crypto or Bitcoin specifically has been more tightly tied to gold's movements. It is why we're probably seeing it have those sort of strong correlated bounces recently. Because the second most correlated factor for Bitcoin is also sentiment right now. So being the emerging asset class that it is, it's not unusual to, again, because what Ryan said, it is 24/7 traded. So you will see that reaction as it takes in what's happening out there, digests, and then as the tensions have evolved since we saw the strikes over the weekend, we're seeing that now be sort of respected in the market's pricing. So it is definitely a key call out that it doesn't stop trading.
Right. Yeah. And just, is it something that from an exchange's perspective, the way that people are trading hinges on these kind of areas? Is there much of do we get spikes when things like this happen? Are there dips in trading at other times? Is there anything that kind of jumps out?
Yeah, there is. It is highly correlated to a lot of these events. We find that just on a general trading perspective, that there's, like Ryan mentioned as well, there can be a tendency to just sell. And I guess because it is a 24/7 market, we do see that volatility when it comes in. You'll notice a whole lot of sells coming through, but the same comes with as well when Bitcoin does go down. We actually find a lot of people take that opportunity in the market and acquire Bitcoin particularly. And then you'll see buyers all start to jump up as well. And it's actually really interesting to watch it on our trading data as well. You can see it go up and down, but that's why I call it the roller coaster, because it is a little bit like that. But that's, I guess, also part of, the enjoyment of crypto as well.
Right. So it kind of takes that initial hit sometimes, and then people are like, wow, I still believe in crypto as an asset.
Yes.
Let's jump back in.
Yes.
Right.
Very much so.
It's past 100,000 US. It went quite a bit above 100,000 US. Then it came back down. Now it's back above, I think, it could have changed since I last looked about an hour and a half ago, but I think it was about 105,000 US on the back of what happened this morning. As I mentioned kind of in that opening, we do have some projections that maybe 200,000 US by the end of the year. Are you able to talk at all to maybe what some of the assumptions are that are underpinning those valuable perspectives and that outlook?
Be good to get everyone's thoughts. I think everyone's probably on the same boat. To your time horizon, if everyone's got a different expectation of when the delivery date for certain prices are going to be. Again, excuse me, you look back at 2013, we were staring down the barrel of Bitcoin under $20,000 US. No one was talking about $200,000 then. But we could all, I think everyone in this sort of panel today could easily have seen that, look, definitely is possible. And when you look into the macro factors that sort of price in these expectations, well, one of the limiting factors is a broadly speaking continuation of currency debasement. So the idea that over time we're going to see, probably not to the same extent, but the similar effect that there always will be a devaluation of currency in our system. We see this as Australians in our property market every day. As parents, as some of us here, we see that in bread, milk and cheese prices. That's getting insane right now. But the question you got to ask yourself is, do you expect things to go the other way tomorrow, in a year, 10 years, 20 years? Likely answer at this stage is no. We've just got, unfortunately, this system where, for every real dollar floating out there might be $3 to $4 backing it in some sort of derivative way or fashion. So by some sort of, this whole idea of refinancing is sort of playing into why Bitcoin is becoming more of what's considered like a hard asset or a global asset. At least that's sort of like the way that we view it. Yeah.
No, absolutely. Ultimately, you have to remember Bitcoin is a commodity, and that's how it's treated definitely in the US and the biggest regulatory regimes. And it acts like it, and it looks like it, and that's why we've got the digital gold narrative that Larry Fink has popularized. So what does that mean? That means you've got something that is like gold. It can't be printed by governments. It can't be debased. That is why it is a really powerful monetary inflation hedge. Not high street inflation, but monetary inflation hedge. So as deficits grow around the world and as central banks cut rates, that money supply is growing, but these hard assets, which are gold and Bitcoin and real estate, are really holding their value and obviously increasing, being priced up. And we don't see any reason for that to stop. What also has driven Bitcoin more recently is moving from a really retail-driven, a retail-purchased asset to something that is now has corporates and even some sovereigns looking to buy and operate in the space. So these are much bigger pools of money that can flow in and push those prices on to the 200, 300,000, much higher.
Yeah, and that's definitely an area. I'm going to be asking you guys about. Absolutely. One thing there, though, like the 200,000 number, it feels very bullish to me just because it would essentially be 100% growth in the next 6 months. And I know a lot of the projections when it was kind of first being made, it was as it passed the 100,000, and that was a little while ago, but that would be a real massive increase. Nothing really gets 100% increases in that short of time period, right?
I think many of us would probably say it does happen, but it's what you choose to do when it's up 100 that supplements us all. But sorry, you're going to say something?
Oh, no, I was just going to say, but I mean, if we look at even like 2018, back when, Bitcoin was down to what was about $5,000. And then now it's at 150K, right?
Yeah.
Like, I mean, again, I know that's quite a long cycle, but with crypto, I think anything is actually possible, and part of the beauty of it as well. And, it does seem like a really large increase perhaps in the next 6 months. But Keith, everyone always asks me when I have that crystal ball as to when that's going to happen. Family seem to go, come on, when's it going to happen? But I think there is so much potential, like the guys have talked to today, about how it can get there as well. Maybe not the next 6 months, but again, I think there's definitely a possibility there as well. And if you compare it to traditional asset classes as well, like we've been talking to with even real estate and gold, crypto is still just at that surface level here as well. Right?
Yeah.
Like, so there's still so much room for growth, which is, there's huge potential here.
Yeah.
I'm sure we all like to compare it to gold. Gold is a $20 trillion asset class.
Yeah.
Bitcoin is a $2 trillion asset class. In many ways, Bitcoin is superior to gold. So we don't think it's unreasonable to look forward a few years and see it will gravitate towards a 10x, which will be a $1 million Bitcoin. That is the direction of travel. And there's plenty of analysts who have pushed that out for further dated.
It does kind of, with the time horizon on it, it's kind of less important than the idea that it will continue to grow, right?
Yeah. But when you look at like some of the things that are unavoidable outcomes from here, like when we look at the US, largest GDP in the world, they've taken a few interesting measures in the last few months. I don't know if people have been watching. So everyone's sort of focused on interest rates, but there's other ways to sort of change the liquidity engine that is the US dollar. So they've changed the SLRs. So that's basically the refinancing, the level at which the ratio of banks can lend against their balance sheets. So all of a sudden, if we're going back to pulling apart mandates that were set since the GFC, I literally think that's what that mandate's from. We're getting to a situation where we're already seeing private markets show incredible growth in corporate credit markets, investment grade as well, not just junk bonds completely through and through. The world's appetite for risk in what's been a very yucky 2025, it doesn't seem like it's been shook too much. So you sort of put anyone on where they're thinking the risk curve is right now. It seems like people are feeling more comfortable to step out to further out on the curve. So that's going to make things like treasury seem potentially more, desirable. Crypto as a whole will likely benefit because it probably will weigh down on the dollar. So while 200K, I think it's unreasonable to think that we're going to get there by the end of the year, or we don't know, but we can probably assume it's going to be higher unless there's another random tariff invasion. Something never happens. Right? That's the thing, right? So we just need to get Trump off the social media, I think. That'd be great.
Just in every facet, basically, yeah. But it does kind of go to the point that you raised earlier around more institutional money coming into crypto and Bitcoin in general. The spot Bitcoin ETFs have obviously been a pretty major component of this and a big development. Obviously, there was a lot of resistance to that happening for quite some years. How's that really changed the game in terms of not just market access, I guess, liquidity, confidence from advisors? What are you seeing from there?
It's all of those things. This is a huge distribution unlock. It's really unlocks $100 trillion of capital market, which is the US equity market, to be able to now come and play in this space. Prior to that, you had to go through an exchange, and that was really difficult for fiduciaries and really big pools of capital to go and do that. And now they can do it through an ETF, through a really trusted name like BlackRock, and have a lot more confidence whilst regulation has been catching up in the background.
Would you say it would have even been possible for many people to even get that exposure because of the bylaws that they probably had from an investment perspective?
You probably saw proxies doing really well, like MicroStrategy. In fact, you did see that. And that was, and still even, I think in the UK, up until very recently, you still couldn't buy a Bitcoin ETF. They were buying a lot more MSTR to get the exposure to Bitcoin in that regulated space.
Yeah, okay.
Yeah. It's definitely an interesting area of how it opens things up for more retail clients, being able to have that access. Should it be really only considered a strategic allocation in a portfolio, or would it still be kind of, a bit speculative? Would you think it's more of that strategic allocation versus the speculative holding, I guess?
Can I jump to that?
Yeah. Honestly, I guess different strokes, different folks. I mean, you just got to point to the institution that's buying and sort of understand what does it make up in their allocation, I guess. I mean, what's the going recommendation? 3% is what BlackRock is sort of touting is a recommended investment rate. So everyone's just got to work that out for themselves, I think. We could point to anyone that is doing it and probably unpack what it is for them.
Yeah, so very much based on personal circumstance, what their portfolio looks like, their risk appetite, how confident they are in their understanding of it as an asset class. Obviously, having access to it through an ETF probably lessens the curve of needing to be tech savvy and understanding it, but it probably plays a big part, right?
Well, I was going to say, I mean, I think that's part of it, right, Keith, is that for those that are wanting to invest, an ETF's a great way, and I know I've got the retail exchange position here, but just speaking outside of the retail lens, a lot of people don't want to be able to trade and transact themselves so granularly. And so that's where it provides them the facility to have the exposure to crypto. And personally, I do think it's a great opportunity for people, as long as they're obviously working through a reputable company to ascertain it. But it's another door opening for now I'm talking in the Australian market, for everyday Australians to be able to get in as well on a wholesale, and there are some retail lens as well. So
yeah. Looking at it from maybe the perspective of a financial advisor, someone along those lines who is incorporating it into some of their client portfolios, what are the risk frameworks, or I guess the guardrails that they can use? I mean, there's going to be some varying risk tolerance for their clients, but what are some of those? What can they use in that risk perspective?
Ultimately, so this is my background is in portfolio construction, and ultimately it's about position sizing. So you've got this new asset class, it has some low correlation and behave slightly differently to everything else. Therefore, it will be accretive to a portfolio, even at a 1% for a conservative investor in that sort of portfolio. It can potentially still even reduce volatility and really increase returns. So ultimately increasing your Sharpe ratio. I think we've seen BlackRock and Fidelity have their model portfolios and their multi-asset funds putting allocations anywhere from 1 to 4 and 5% for those conservative to high growth profiles.
Mm-hmm. From a exchange perspective for both you, Pav, and Jess, what are you seeing in terms of direct demand from clients for crypto? Is it still mostly, the younger demographic, some of the older folks kind of getting a bit more confident in it, more up to speed? It's been around for quite a while. It's not, a completely new class. Is it still those young digitally native investors, or are you seeing some shifts in demographics?
Okay, sure. We have seen a shift. So, I mean, I've been a part of CoinTree since 2017, and back then it was very much more the younger, tech-savvy people who were coming to all our meetups and whatnot, wanting to buy and trade crypto. And now we notice investors have changed substantially. We've got older demographics. So, as I mentioned before, we support SMSF customers, and the onboarding of SMSFs has just grown exponentially in the last 4 years particularly. And so we're noticing that demographic change. And so for CoinTree, ours was initially much more a younger demographic quite a long time ago. Now we still see that really actually between individuals who are sort of 40 plus, actually now much more a demographic that trade with CoinTree. And we notice that, they select a myriad of assets as well. Although Bitcoin is still everybody's, I guess, primary asset from what I see on the platform anyway. But yeah, we have seen that shift, which is great, because again, that maturity is starting to come along where, people aren't as afraid to jump in and have a look at crypto, because there's nothing to be afraid about if you know what you're doing.
Yeah.
Similar kind of an idea.
Similar lens, we're seeing probably more, quantity of signups, I would say, from the younger generations. But in terms of conviction and regularity to add to portfolios, it's definitely from the older demographics. Let's say 30 plus. more concentrated when we get to that 40 to 50 plus. So whether people sort of seeing it as some part of their retirement plan, like that's not for us to say. But yeah, we again have seen similar growth with the SMSF side of things. We have an OTC desk, which has also seen just proliferating activity when the market does heat up. But yeah, it's generally showing us that there is a demand from Aussies, as much as people may not see it right now. I mean, again, it's just been a rocky year for anyone just managing their stock portfolio. So it's understandable people are a bit defensive right now.
Yeah. Are you seeing it in terms of mostly with Bitcoin, in terms of the movement to the older generation is, do you have a lot of 60-year-olds in Ethereum or Solana or anything like that? Or is that where the younger clientele are kind of still pushing?
SMSF's definitely more conservative, but yeah, I think the general consensus as we've seen this sort of adoption arc come through, there is almost this idea that there's the three major players, I guess you'd say, your Bitcoin, ETH, Solana. So again, we're not seeing probably as much staying power as you would see with Bitcoin, like that it's going to be here to stay.
Yeah.
But it does seem people are willing to put a portion into speculating that this sort of layer of smart contract technology, or you could think of it as like the computer layer of blockchain technology, is going to at least be around for this first iteration or second iteration of mass adoption, if that's what we're all anticipating is coming. But yeah, it's there's definitely appetite. Yeah.
Just much movement into the different types of coins.
Yeah, we've seen USDT actually. So stable coins has actually been something that we've noticed quite an increase on in the last 12 to 18 months particularly. So diversifying slightly from just Bitcoin, USDT, and being able to transact using USDT. That's been really popular, and that's actually more transactional rather than the hodlers that are holding on for their portfolios. And so, but Bitcoin is still primarily the main one. When we look at those type of investors who are wanting to, our understanding is that they're wanting to secure that typically for a portfolio for themselves. But again, we offer over 200 assets, and you still get people buying, lots of the altcoins. But yeah, otherwise it's still been Bitcoin, Ethereum, and then USDT from our side. Yeah, been the top three that we see on our platform.
Only altcoins, not quite down to the meme coin level.
Well, we have some meme coins, and my team do love to list them when there is a new one out. But again, I think we can all comment to say that so they're sometimes short-lived. So we only list select ones as they go up, but they're definitely used by the younger demographic.
Great for the user with the short attention span, which the younger users have. So everything has its place, but it also, at the same time, I think meme coins are great. I think Solana is often criticized for being a meme coin chain, but that is stress testing the network for hundreds of thousands of users to be able to do how many transactions you can and support that. So ultimately, the real goal of Solana was to become an internet capital market infrastructure layer. And meme coins are stress testing the ability for large transactions and volumes to be able to happen on that chain for a couple of years' time, when that becomes more appropriate and we start to trade things like Apple or whatever shares you want, NVIDIA shares on chain 24/7.
Yeah. And so what kind of holding in beyond the Bitcoins, the Ethereums, would you be looking at from that investment manager side? I'm assuming not a lot in the meme coins, but how far do you diversify through the broader crypto
ecosystem? Yeah, sure. So we like to be really conservative. So there's a lot of Bitcoin. We really like Bitcoin, and then there's quite a bit of Solana. We don't go out into the meme coins per se, but we really do go for the meme coin infrastructure. So there are some decentralized exchanges that see a lot of meme coin activity. So we want to be there because they're making really great fees and revenue, and so we want exposure to that. So we're certainly playing the thematic, and we are really high conviction as well. So we might have 12 holdings in the fund. We don't want to go too far out. The risk spectrum into VC, there's lockups, there's all sorts of issues that you start to face when you go further and further out that risk spectrum. We just want good conservative exposure for our clients to those what we think are the best assets in the next 5 to 10 years' time.
Yeah. For SwiftX, is there much in the down to the meme coin level, or steering mostly clear, or just every now and then they come through?
It's definitely plays into you think about, I guess, everyone potentially here today, when you first get in, you probably, like myself, I don't know, maybe bought the top in 2017. So unfortunately, crypto has this sort of adage, you don't know about it generally until it's too late, because everyone's talking about how much something's appreciated or how much money someone such and such has made. So when you get this sort of mentality, it's not only just in crypto, like you see it across like penny stocks and things like that too. There's just this, everything's hot, so I've got to get in on this, right? So that's when you get some potentially poor judgments. You're just jumping into crypto for the first time. You're not quite understanding what you're buying or what you're doing, and that's where education comes into quite a bit of it. And we do feel like a fair bit of education on our end as well, and research and analysis, and just trying to get people, when they're coming through the door, they at least get something that's as neutral as possible in knowing how to approach sort of these markets, because again, it is not the wild, wild west like it used to be, but it's still, if you're looking for trouble, you can find it. So I think for everyone, it's just understanding that, look, it's okay if you're obviously dabbling with money that's not significant to yourself. And I think we're going to continue to see that. That's always just going to be a part of innate human psychology. But, when we're talking people putting serious amounts through, I don't think we really see that much conviction across a lot of these more speculative assets, but they are there for people that want to access volatility. And then when the market is trending, they want to sort of find something that is outperforming the rest of the market. So, but I still think, one of the cardinal sins people have is holding onto these things a bit too long. But that's just unfortunately something you find by touching the sun yourself, unfortunately.
It's the diamond hands.
Yeah.
You mentioned just before, Ryan, around investing maybe in some of the technology behind crypto. That's something that a lot of the institutional investors and super funds have been kind of going that way versus actually holding Bitcoin, for instance, itself. I think AMP has a holding of Bitcoin, but they're kind of the only real super fund doing that. Do you think that's going to change potentially, that it will move beyond that investment in the chain or the technology behind the blockchain and moving into that area and actually having direct holdings?
Yeah, absolutely. I mean, there's some old sayings in investments: don't proxy trade, hold the real thing. And that really does mean holding Bitcoin and these actual crypto assets. Having said that, it's about dipping your toe into the water wherever you're comfortable. And we saw the IPO of Circle a couple of weeks ago. That's performed really well because the market is starved of good, understood equity exposure to crypto companies.
Yep.
And that's really good exposure, but we think that business utilizes all these other blockchains. A bunch of USDC operates on a Solana, on Ethereum, and will be sending transaction flow and more revenue into those infrastructure plays. So there's room for both, definitely, but we like the pure play because anything can happen with proxies.
Yeah, so thinking there's a chance the super funds might open their eyes to the crypto world. I mean, are there any hurdles that are kind of stopping them?
I think it's inevitable that they get there, and we see that the US really is leading the charge there, and it's not quite mainstream yet, but it's certainly trending that direction. Someone needs to dip their toe first, and that's happened a lot in the US. We're just starting to see it here. That trend is likely to continue, but the real problem, I guess, for super funds is that fiduciary relationship, and it's really easy for them to get egg on their face if they go make a big noise about, we are now holding some Bitcoin and Bitcoin is down 10% the next day. It's quite polarizing as well. So they will have members who are really upset about that, but equally they're going to have members who are really excited about that. Chatham House Rules, I had a dinner with an AMP employee on their addition to Bitcoin in a strategy, and they had more member interest in that than they've had for years on anything else. So there's certainly demand for it, and it shouldn't be just like, no, we're not going to do it. At first, we encourage everybody to understand it first and get that base level of understanding, and then make a decision from there.
Yeah. There's something you're seeing, not necessarily demand from super funds, but in that same idea of super funds moving to it, having a look, getting that client kind of excitement, a lot of interest. Are you seeing any of that? Are there any particular things that happen that cause that surge in interest coming through to the exchanges? So it might not be a super fund adding it. That's probably not going to flow through to you guys, but any instances of things happening within markets that kind of cause that surge of interest?
Yeah, I think the adoption of it, every time we hit a major milestone, it definitely brings people to it. We do see a surge of activity. So I think the most recent one was the Bitcoin Strategic Reserve in the US, just understanding that there may be a demand from the governments. And the simple take there from the investor might be, hey, I want to get in before the government start getting in, very simply. So, when we look back at that, we look at, just the activity we saw when the ETFs actually went live. People understand what's happening around them, and I think they aren't just wanting to just sit on the sidelines for any longer. Every step forward is just another sort of tick for a lot of people's just personal investment checkboxes. But I still wonder if people are sort of understanding, what is the purpose behind their exposure. And again, that just goes back to Bitcoin's transferability. It's a limited supply, only 21 mil, of which was it 19 and some change have been created already. So we're well past the issuance sort of thresholds for. Look, there could be a lot more to come to market. In reality, there's going to be a scarcity moving forward, and that's where you see these price projections of 200,000, 2 million, 200 million. And again, it's just a time as sort of the demand increases, but supply remains reduced. Can only really go one way, right? So, I think it's going to be interesting to see how the next couple of months play out as everyone sort of is easing into the back end of 2025. I do wonder if, again, we start to see, I think the next deadline is August for the committee in the US to go about the regulation activity, maybe on the market makers, whether that instills more confidence that, hey, this is an industry that's having the guardrails put up, it's not going anywhere. That again might just be another sort of check for many people's boxes to start looking into it. So.
Right, so kind of like the institutional investors getting more into the game then causes a bit more interest from the kind of the retail, the individual kind of thing.
Yeah, like the Bitcoin ETFs, that was a big one where we noticed that from a retail lens as well, that it just sort of, it actually reignited people that had accounts and people wanting to come back in and trade again because they were like, oh, hang on, I can see if these, if there's Bitcoin ETFs or even the institutional investment, the more people I think will publicly see about it as well, they then start to be, re-triggered about it or wanting to dip the toe in. I think though Australia, again, like Ryan talked to as well, some of the, I guess, more following the US a little bit more as well, when we see changes over in the US, they then sort of gradually taper through to Australia. Obviously Australia's regulation is still being, formed at the moment as well. We are going through a consultative period at the moment with regulation. And I think that's also going to be, extremely important in cryptocurrency's journey in Australia as well.
Mm-hmm. We're able to maybe talk about the regulatory environment in Australia a little bit. Where do things stand for advisors, for instance, trying to get their clients in there? Any restrictions on them? Where are we at in terms of regulation for crypto across the board in Australia?
Yeah, so I guess first of all cryptocurrency exchanges must be registered with AUSTRAC for their AML and CTF reporting obligations. So that's obviously for anti-money laundering, and so that's a minimum requirement just from that lens. Just so I guess those at home who aren't perhaps aware of that, that's a mandatory requirement. When it comes to financial advisors, though, because cryptocurrency still isn't deemed as technically a financial product yet, it does make it a little challenging because I'm sure there are financial advisors out there, and that's from my past world as well, who are probably wanting to give advice, but it does present a bit of a challenge. And so that's now where the regulation and in Australia is now starting to be formed as to how cryptocurrency will sit. From where I see regulation moving forward is that it will become a financial product, and that's where Cointree and like many of the exchanges are working towards licensing in that area as well, because as digital currency exchanges, we actually don't require a license to offer digital currency assets at this point in time, but I do see it coming along that way, and we're all a part of those conversations with the regulators to try and form the appropriate, I guess, positioning of cryptocurrency so that it can be under a nice licensed regime, which also protects the consumers as well and the investors, which is really important as well. So that's all currently being formed at the moment, and consultation periods have been taking place that we've all been a part of. And so I believe next year will be quite a big year in that front as well to see where that sits within Australia. I don't know if anyone else just want to add. Yeah,
we're a little bit different because we are a managed investment scheme, so we're already sit within the regulatory framework. We're not a crypto asset. We're a financial product, being a wholesale unit trust. So from our dealings with advisors, they either have their own AFSL and they're fine to recommend our product, or potentially they have borrowed somebody's AFSL, which is quite common as well in the industry, and they may have an explicit carve-out, and that may say no crypto assets or no crypto products, and it depends on the details of whether we fall within that or not.
Yeah, so it really needs to be whether it's on the, on the licensee's APL or whether it's, no, you can't touch crypto.
Yeah, and that's an important distinction to make as well, because mine's coming from the retail exchange lens as well. So that's an important distinction, yeah.
Pav, any?
My understanding is it's all general advice, right? That's all they can really give. That kind of limits their personal tailorability to consumers. I think that'll change over time innately. But I still think there's a big just a gap. Just again, being at the conference last weekend, speaking to a few people that sort of work in that lens. Many advisors are just happy to go by Jamie Dimon's. It's just a pet rock in the corner sort of a mentality towards crypto right now. Like it's not big enough to matter. And that's, again, just goes to show that there's just that innate, lack of understanding from a very sophisticated group of individuals who should at least challenge the idea and look to understand it, which I think is going to happen, but it's just a sign of the times where we are now. So.
And mind you, it's a good point. Jamie Dimon has been a long time critique, skeptic. JP Morgan now offer Bitcoin services and funds and everything. So he's speaking out the side of his mouth when he does that, I think. So, everybody eventually is incentivized to operate in that space. And we don't think that changes. Here's a perfect example of why ultimately, eventually, Bitcoin will change your mind.
Right. And so one of the things you mentioned there, Pav, was about kind of the understanding of how crypto works, and I guess getting across the volatile nature at times. It can swing. You mentioned the roller coaster earlier, Jess. So it's one of those trying to get people to understand. Would you be looking at the best way that you think to educate is direct to the consumer, direct to someone looking to invest? Do you think going through financial advisors would be a good route to kind of provide some of that education and close the knowledge gap?
Yeah, I think you got to, again, just step back and just think about what you're trying to do here. Like you could be investing in, corporate bonds, you could be investing in real estate. You kind of want to understand what's your counterparty risk in any instance, right? So I think there's an onus from the investor that they at least have a core understanding of what the investment into crypto looks like. And again, I think that's a space that's evolving. It'll get better. Universities aren't touching it, but there'll be a point where they have to start educating people about it too. So there will be standardization, I think, is like a big key call out. And again, we're all doing our part as exchanges to sort of step in and educate consumers, because when consumers are educated, they make better decisions, and we get to keep that consumer for much longer rather than see them burn themselves out. So it's a win-win for everyone, right? And then when it comes to the advisors, again, there are some people proactively out there trying to step in and provide that education layer as well. But until it becomes part of their CPD, I'm assuming, until there's continual requirement for them to remain upskilled and skilled. Again, if we're relying on communication, it's not one way. So I think it's important that everyone sort of has some sort of vernacular about the investment class itself to be able to understand what it means to their portfolio. Because again, we talk about the volatility, but you don't have to go all in. It can just be a portion of your wealth, and that's the key thing that people need to take away. This isn't you need to buy one Bitcoin. That's not how this works. So that's actually a very common misconception, which often leads people down the altcoin route. They just seem to lack that understanding.
Yeah, the amount of time I have had people come to me thinking they need to purchase an entire Bitcoin, and they see the price of it and they're like, hang on a second. But I guess that's where retail exchanges obviously can assist in that process as well. But there certainly is a gap where exchanges and like Pav mentioned as well, we are all trying to do our part with financial advisors, accountants, and those that are really interested in wanting to be educated further on cryptocurrency as well. And so, I think there's certainly there is a gap there, and that's something that we're all happy to, that's something that we're all open and happy to bridge and try and help educate all the types of people that are trying to get into crypto. I do like, obviously, the CPD hours and whatnot as well. I'm pretty sure there will be, I'm sure there will be in time a course and updates that will qualify in that area as well. But yeah, I think that it's important. And again, from my world, being from the accounting and SMSF space as well, I love being at those conferences and speaking to people in that field to try and help bridge that gap. Yeah.
So we do a lot of lunch and learn style education pieces for advisor and advisor groups that are interested and they want to either start their journey or even just upskill it a little bit or move it along a little bit, and they can bring some of their investment committee in and really have a conversation that's two ways and sort of get a better understanding of whether it's for them or not, and just hopefully move them along the curve a little bit.
Just on that, do you find like there is like a certain element that's always like usually an aha moment for people, or?
It's something different for everybody.
Yeah.
So that's the really hard part of doing a presentation. It'll be one slide in there somewhere will resonate with someone, another one will resonate with somebody else. And then there's obviously that demographic split as well, where the younger advisors are, you don't need to give them the basic education. They want something a little more, and then you've got to sort of tailor for everybody. So that's the challenges.
Do you find there's any kind of consistent or persistent myths or fears that pop up during those kind of sessions, that they're these common misconceptions that people have around digital currency?
Probably there's this perception of volatility. There's a really strong volatility bias that you can't touch it because it's volatile. But at the moment, Bitcoin this year, for most of this year, has been less volatile than Mag 7. So, I don't think that holds water anymore, but it was true a couple of years ago. Definitely that volatility has come down. And a lot of those criticisms have also gone away, like the crime one persisted for a while. That really dates back to 2012 and it just is not present today. This is why governments own so much Bitcoin, is because they caught criminals because they use Bitcoin. And it's a terrible tool for criminals to
Really
use.
traceable.
Yeah.
It's the whole thing it's all on the chain, right?
Yeah.
Exactly.
Can't hide it, can't delete it, nothing.
Yeah. You both kind of mentioned the idea of the having to buy an entire coin as being one of those myths or those misconceptions. Anything else that you guys come up against that kind of stands out as holding people back?
I wouldn't say it. I think again, it's not something you want to call out on a show like today, but like it is becoming harder and harder just with some of the sort of banking sort of mandates that are being put on people's accounts. So there's an extra layer that people need to navigate, and that's fair. Like everyone's got their own obligations, but we're finding that's a bit of a barrier right now. In terms of education, I mean, if we're going to be a little bit critical, like again, I'd go back to the volatility element. While Bitcoin's probably, I think, held very, very nicely through everything we've seen since 2024, the less can be said about some of the other alternate markets. I think just people lacking an understanding there and probably over-indexing may be perilous. I mean, nothing really else comes to mind for me.
Yeah, I think the education piece is huge. So from where I sit as well, and not to generalize, but being a female in a heavily male-dominated industry as well, I am personally really trying to put a focus on getting a lot more females into cryptocurrency as well. And there still is this hesitation that it's that volatile narrative. And again, being someone that's been in it for such a long time and someone who diversifies their portfolio a lot myself, it's really interesting. Once you get them through, maybe it's the aha moment, or perhaps it's that comfort of having their hand held to learn how easy it is to ascertain assets, like really simply and safely. But I think as well, some people perhaps have fallen victim perhaps to maybe not so legitimate players. And so then they might have been a little bit, burnt by that transaction, or have lost out perhaps by making a mistake that they weren't educated on as well. And so key things for us, again, education is massive. And then, yes, that whole Bitcoin myth as well, which still comes up regularly as well on that. And just being able to show that there are really secure, safe platforms and ways about going about this, depending on your investment style as well, whether it's using the likes of, Miracle Tree Capital or an exchange like us as well. The options are there. And I just think people, perhaps as well, mainstream media doesn't always pitch and always put a nice picture on sometimes when there is a big, news about crypto. And sometimes that can also confuse people as well. But there's genuine Aussie businesses doing, great jobs at being able to make these assets available for Australians. It's just about understanding how. Yeah.
And I mean, both tech and finance kind of combined, the female-friendly environment, they're kind of, both of them there working together to make it a bit harder. I think one of the kind of, I don't know if it's probably is borne out through research, but is also a bit of a stereotype, is that, generally speaking, women are more conservative with how they invest their money. Is that maybe a factor holding them back from kind of moving into the crypto space?
Yeah, I think so. I mean, I'm part of a couple of ambassador groups as well, and I often have these conversations with C-level executive females, and they're just like, oh, no, it's not for me. And I'm like, yeah, but why? Give me a good reason. Give me a good reason as to why. And again, it's either in the too hard basket, I don't know how to, it's too hard, it looks too volatile, I don't want to touch it. Or it's been something that's been perhaps a little tarnished by more mainstream media as well, as though perhaps it's not used for the right reasons. Again, it's that education piece. I sit down and I'm like, no, we're gonna work through this and have those conversations to open the door. And once they realize that it's actually, it's a really viable asset and a great opportunity to diversify, that then starts to spark the interest as well. But I mean, again, from CoinTree's customer base as well, it was for a long time, a heavily male, demographic of customers that were trading for a long time. But I have seen that shift, which is great. And I think the more crypto matures and the more education that's out there and people actually putting faces out to companies as well, it's really important too. Because crypto as well, in the early days was just, but you were behind a website. No one knew who anyone was. And then I remember getting out at some conferences and they're like, oh, wow, there are people behind these businesses. I'm like, yes, we're all working really hard. Yeah. So I think that also helps having a human element as well.
Yeah. I've got a question from the audience here that I might ask you guys about. What does Pompliano's Bitcoin treasury company, which plans to hold $1 billion US dollars and generate revenue through lending and derivatives, say about institutional crypto adoption? Does this strategy make Bitcoin more mainstream or add more risk? Anyone want to?
It does both, I would suggest. Certainly, maybe 200 companies now have added Bitcoin to their balance sheet. Michael Saylor has been the biggest proponent and advocate for doing that, and he's been roadshowing effectively for 2 years, educating CFOs, CEOs on why and how to add Bitcoin to their balance sheet. He's suggesting 700 companies by this time next year will be adding Bitcoin to, so that we're going to see a real acceleration. Definitely, that's what we expect. He is better placed than anyone else, we believe, to see that demand come down the stream. But that's right. I mean, it's certainly going to be further mainstreamed. Will that actually create a risk at the same time where you have these new companies who are struggling to do something else and put some Bitcoin on their balance sheet? Are they great custodians of Bitcoin, or are they going to be the next wave of retail who paper hand and sell as soon as something goes wrong?
Yeah, just to add to that too, you look at any sort of boom and bust cycle over the decades as well, there's always that inherent risk that people might be buying these assets as well on leverage, which is going to happen. So again, you're inherently adding leverage to a system that is, we talk about it like it's spot Bitcoin, moving the price organically, and it's not going to move anywhere. If all of a sudden, companies purchasing these zero bond coupons, etc., are forced to have to offload their holdings, it might cause some volatility. Again, we skipped over the volatility word, but yeah, it definitely adds. Having these institutions come in, it's good, I think, for this early adoption, but I think you're adding to not a house of cards in any way, shape or form, but you're doing the same thing every business cycle does, where we're just going to see the risk curve potentially blow out when you've probably seen overheating of that type of activity. But I think we're far from a moment like that. So, yeah.
Got another question here that's following up on some of the talk about, some of the criminal activity or the money laundering and stuff along those lines, where they've basically asked, I always read on the news, and this might point to your point there, Jess, around news coverage, but I always read on the news that is the criminal underworld that use crypto to hide their transactions for money laundering and counter-terrorism financing. What's going on in terms of reporting around that, do you think?
Yeah. Well, I mean, again, just to take a step back, it's really interesting how the media don't always comment about cash, which is everyone's good old...
Or the credit card.
Cash and credit cards as well. But crypto always comes into the spotlight. On exchanges, I guess from just a reporting lens, our AML and compliance processes, they're extremely onerous and they're huge. And this is to protect consumers as well. And so, what AUSTRAC worked towards, and there's also National Anti-Scam Centre as well, and there's actually a really united front over the last couple of years from regulatory groups to try and support Australians who perhaps might be, part of that process, but also trying to mitigate that terrorism financing as well. our obligations are enormous as to what we need to report on, if there's any suspicions and whatnot as well. So all types of exchanges need to be able to do that because we all work together to try and report that type of activity if we see it. I will say, though, coming from someone who's been in the space for such a long time, the way businesses, I guess I'll say, should operate, can't comment to all the exchanges in the world, but the way businesses should operate, mitigating your risks in that area is, really, really important. And we see a lot less of that in the industry. But the regulators are working really, really hard with law enforcement as well to try and, I guess, reduce that too. But I guess, like I said at the beginning, when you compare it to cash and whatnot as well, which never gets highlighted as to how that would be connected to money laundering, it's minor. And I can't remember, there is a statistic going around. They actually did run recent statistics on crime. I don't know if anyone has any of those stats on top of mind.
I used to pay attention to them because we saw it coming down and down and down. I haven't looked at it for a couple of years, but a couple of years ago it was something like 0.2% of transactions that happen on chain are associated with criminal activity, and that was halving from 4 or 5%. And back to those 2012 days where it was Silk Road, which was the primary use case at that point in time. It's certainly gone from a high level to this tiny level, and it is traceable. People also confuse pseudonymous with anonymous, so and that's a really strong distinction to make.
Well, thankfully the Silk Road guy has been pardoned, so that's always great. On the back of the you mentioned, you were talking about Michael Saylor. We had a comment on here that Michael Saylor says, by the time your financial advisor is able to recommend Bitcoin, it'll be $10 million per coin. Now that, on these projections, that could be 18 months from now. But is that a legitimate concern? Do you think that they're just going to be so far behind, and licensees being able to provide, have them on their APL and feel confident that it's already, so much of the growth is already going to have happened?
It's really hard for every business to keep up with technology. So this is just another example of that. And you can either be, you can step into that or you can step back from it. And we encourage every business everywhere to step into any technological disruptive change and at least be aware of it. You'll be better able to deal with it if you are engaged in some way in that technology, whatever it may be.
Yeah. And we did talk a little bit towards the start around the way that Bitcoin and crypto in general works, I guess in a different way to most assets, but I would like to get a bit deeper on that and some of the specifics around how you see it differentiating itself and maybe, being used as a hedge. It's very differently correlated. It's uncorrelated with most things. What do you see from that perspective?
Just briefly from me, that correlation is dynamic. So it moves and changes over time, which means overall, over a longer period of time, which is what you should be thinking about when you're putting a portfolio together. You're not looking about a 1-month time frame or a 1-weekend time frame. You're looking at a 5-year time frame. So that dynamic allocation leads to a low correlation, and that means you can add it to a portfolio, and it will typically enhance your risk-adjusted return. So that's basically what's happening behind the scenes. Why is that happening is another question, and I think we've talked about some of those reasons. It can be very much like gold, and it can also be very much like high tech in that the adoption curve is going from individuals to this huge, broader audience of buyers.
Yeah. Do you feel that it being so bit of an outlier in the way it reacts to things, or it operates in a different way depending on the circumstances, is a good argument for it as in terms of a diversification play?
I think so. Like, if we're boiling it back down to, again, being more of a commodity than a stock, if we had to try to define it, what we're potentially looking down the barrel of, especially could be exciting to Australians, is some kind of potential commodity boom, broadly speaking, where maybe paper equity stocks may not perform as well as, say, like your uraniums or your platinum, et cetera, like that. So in terms of, it moving in its own way, I don't think it'd be the worst thing if it just continued to do what it does, because again, it's just a pure reflection of the macro. It's a pure reflection of the market and its demands. You could say the fact that it has been moving in its own way for these last, let's call it 2 years, moving between higher correlation with gold at periods and stocks at other periods, just goes to show that the investor's appetite, it is evolving as what's happening around us is evolving. So, I mean, it's important to always acknowledge that things can always just change at a dime of a hat. But I do like, again, how Ryan said it, you got to think about a lot of these. Well, I'd like to personally think about these things in more broader strokes. I would 100% agree when I first came to crypto. It was more what could I make in 6 months? Now it's more like, what am I going to leave for my kids? So, you've just got to completely change your optics. It doesn't replace your whole portfolio. Again, it's meant to be something that is supplementary and beneficial for you, right? So again, that risk-adjusted return is just a really key way to understand that, I feel. Yeah.
We've talked a bit about, institutional flows into crypto and Bitcoin and things like that. What are the differences in terms of the way it's happening globally? Obviously the US in particular, but then the way that it's happening in Australia. Like, what are some of those differences that the local market's experiencing versus more globally, do you think?
I think stablecoins is a big one. I don't know. Like, this is huge. Like, you got to think about a lot of countries. We're very lucky here in Australia for a lot of reasons that we'd like to complain and think that we've got it tough. We really don't. You're not facing the same problem as like Venezuela or even like other countries that where you just don't even know if you put money in a bank, A, it's going to be worth that much tomorrow, and B, if you can get it out to pay for an emergency, right? So the fact that people are struggling with just simple basic needs, like money in a way is a way for people to store their time and effort, right? So you've been productive, you've been rewarded. For someone to potentially take that off of you, we don't really see that here too often, thankfully. But I think when we talk about like the one thing I like to sort of explain with crypto, it is a global asset. I'm not talking about we're going to Mars and we're going to use this currency there. That's not for today. But more the idea that different countries, while borders are this imaginary illusion created by humans, we do have these sort of barriers up that there is this inequity of access to just capital flow. So I think, while it could be US dollars, could be euros, could be whatever local native currency, just the fact that people can have actual control in the year 2025, I feel like is crazy that we still have that issue, just because we've been so fortunate here. So I think that, again, we're talking about crypto real life use cases. I think that is probably one of the silver bullets out there right now that a lot of people don't see. And again, to talk to Circle's IPO and just the stablecoin bill, the Genius Act going through in the US, and Europe's already labeled it as e-cash. There is a framework being built in front of us. And I don't think it's going to be too long before Australia catches up and we just see this knock-on effect globally. So that's one of the big ones.
Yeah. There's actually been some pilots as well run with stablecoins, particularly as well in Australia, and that was done last year as well. And there's continuation into that this year as well, as to how stablecoins can actually, be encompassed into, into the Australian economy as well. And the banks are also talking about centralized digital currencies themselves. And as much as that's not cryptocurrency, it's still a form of digital, I guess a digital transaction. And I think something that I always found fascinating with Bitcoin and still do is that I can choose to send my crypto to someone overseas and I don't have to wait for my processing times and extra fees and things like that to be able to transact. And I think as well, understanding that is part of the, the beauty of the tech behind all types of crypto as well. And Australia is now starting to see that there are different use cases as well, not just for Bitcoin, but for stable coins and other types of blockchain technologies too. And that's where this extends to as well. It's not just about, I know today's conversation is about Bitcoin, but there's so much technology that can be utilized by everyday businesses as well, not just the crypto-y businesses. Blockchain is so multi-purposeful as well. And as much as it's the backbone for what supports, cryptocurrency, there's potential for that as well. And I think you'll start to see much more traditional businesses actually diversifying, whether it's the way that they transact, like we transact in crypto for certain things versus, fiat. You can only see that further develop and grow.
Yeah.
It's really interesting.
I like to think about it. You go to Coles or Woolies and you pay wave. You're not doing the math on how that works, right? It's convenient for you, right? So yeah. I think we'll just see a lot of these use cases come in behind the scenes that you may not necessarily know the architecture behind it. But in the background, you've got, potentially gross settlements worldwide, which cost $44 US or something like that, dropping to like a cent.
Global transaction fees are around $2 trillion. So this is what banks and intermediaries are picking up, and crypto takes that close to zero. And those fees are being paid by either us, the consumer, and with the merchant as well. So those merchants are now incentivized to move across to these newer rails. And as soon as we get a little more comfort on these stable coins through the US regulation, they are going to be incentivized and even encourage investors to go and move to this system where it's 3% cheaper. So we can give you rewards or points or cheaper prices to go to these new rails.
Yeah.
We have actually run out of time. We probably could have gone for a whole other hour, I think, but we are going to have to wrap it up there. So thank you very much all for joining me, Ryan, Pav, and Jess. Thank you very much. It was a pleasure to have you on.
Thank you.
Thanks, Keith. Thanks,
everyone.
And thank you to everyone for watching along. Hopefully you enjoyed the discussion.